What's up, everybody? Welcome to the December 22nd, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indie Wealth. Today's version is the casual Christmas version where I attempt to grow a beard, and I'll probably let it grow for a little bit and it'll get itchy and I'll shave it. But hey, you're going to have to deal with the beard for now. But I'm also going to talk about the hot button topics going on in the markets as we end the year. So let's get right into it. Let's start with number one. You can't blame AI for everything. So I've been seeing a lot of articles lately with regard to the backlash of artificial intelligence and some of the things that are going on in the community, and especially around jobs. And I agree with some of it. I agree with a lot of it, to be honest with you, is that this is going to be a period of disruption, right? Because we're trying to figure out how this is going to make our lives more efficient, how we're going to implement this, how smart it actually is, how we can use it to leverage. And a lot of this is going to be, well, how much productivity can this replace as opposed to humans? I totally get the argument that there is some disruption and there's going to be some difficult periods during this as we continue to learn more about it and as the machines continue to get smarter as well. But the one I saw today was from a couple of preview pages about AI and youth layoffs. And youth layoffs being, especially right now, the youth population, the teenager to sub-college graduate market is pretty dead right now. There's not a lot going on. There's not a lot of hiring going on in that, and people have consternation about it. And a lot of the articles that I read were relaying this to artificial intelligence. I'm not there yet. Maybe, but I don't believe that the jobs we hire youth to do are being supplanted by artificial intelligence as of yet. If you think about what the common denominator of jobs are, it tends to be service oriented. It tends to be in either retail or hospitality, restaurant, these kinds of things. That tends to be a pretty big hirer of youth and college and high school kids. I don't think that's AI replacement. I think that's some level of consternation of the overall economy, which happens from time to time. That's a cyclical behavior. It's not artificial intelligence oriented. My position is that artificial intelligence, especially among where it's going to supplant, is that, again, that mid-level coder, that low-level coder, the stuff that you can try to replace via technology. They're always going to try that, right? Because it's more profitable to have a machine doing it than a human. Humans, you have to pay for healthcare. You have to pay them wages. You have to let them go sleep at night. You have to do those kinds of things, right? So there's always going to be an impetus for companies to look to replace certain components of jobs. I don't believe that's what's happening in the youth cohort at this point right now. I think the youth cohort is much more affected by that K-shaped economy that we've been discussing ad nauseum for the better part of, the last couple of months. Is that at that mid to high end, they're continuing to spend, they're continuing to do the things there, but that mid to lower is starting to feel the pinch of, again, job sentiment, but also just the pinch of continued inflation, continued high prices, and these kinds of things. That's causing them to maybe slightly pause back, but it's also causing the companies to saying, I usually have a cohort of temporary workers that I add during this season, or, hey, I've got these jobs that I need to fill, these hourly jobs that need to be done, but I don't know what the activity is going to look like, so maybe I'm going to hold off on a little bit of that. I think that's far more than, well, AI is replacing high school level equivalency jobs. I just don't think that that's the case yet. So we can't blame, in my opinion, we can't blame AI for that. Doesn't mean we can't blame it for other stuff, but I just really don't think it has that level of impact on that component of the population right now. Turning to number two, the government data, noise versus signal. I should have called this something else because I think it's all noise right now. The CPI report came out recently about inflation, and it actually was a little bit better than expected. Well, within 24 hours, there were multiple articles suggesting that some of the numbers might not be up to snuff yet. Remember, we just had the largest government shutdown in history. And they're coming back and they're trying to get this thing going again. But this isn't a car. You don't turn the engine off. And even a car, if the car shut down for as long as history, chances are you're going to have to, charge the battery, do some things, maybe air the tires. You got to do some maintenance beforehand. It doesn't probably snap back to what it originally is immediately. And I think we're in a little bit of that with government data right now. Is I wouldn't trust it a whole heck of a lot to make a stance on what's going on in the markets and what's going on in the economy we have to rely on multiple data sets. Now, this is always the case. You should always be looking at not one point, you should be looking at multiple points to get what's a trend of what's happening. I think right now, if you're trying to discern a trend from the government data that's coming out right now, and especially since we've reopened, I just think you're more likely to be misled than be in the right direction. So right now, again, from my side, I'm looking at the government data, I'm paying attention to it, but I'm not really suggesting that it has much for signal at this point right now. As we enter into 2026, that may change. I think it will. But right now, I'm just not using it to give a real good sense of what's going on in the overall economy. Turning to number 3 is the amazing rebound of General Electric. If you remember from 2016 to 2020, GE was kind of left for dead. It had an 80% decline from peak to trough, if you will. So during that period, it declined over 80%. You rarely see that, especially for a large established company. So really people were feeling, and I remember this at the time, is GE going to be around in a couple of years, right? Or are we just going to sell off the pieces and call it a day? Well, we did split it up. So GE is now really kind of 3 distinct companies. The industrial automation company, which is GEV or Nova. The GE is kind of the aerospace company for the most part. And then thirdly is GEHC, which is the healthcare company. What's amazing about it is just the recovery in those stocks during this period of time recently. So I went back to May 2024. So if you look from May 2024, which is kind of when the final split up had occurred and you have the 3 companies trading, from that point on, GEV is up 330%. Again, that is the power automation type of things, the power generation and infrastructure type of company. GE, the aerospace company, is up 95%. So it's almost doubled during that period of time too. So 2 very, very successful companies during that period. I mean, that's a little over a year. It's about a year and a half. And one's up 330%, one's up 95%. That is crazy. Just to give you some context, the S&P 500 during that period of time is up about 39%. So that is very strong too. But those companies have far exceeded that. GE Healthcare, GEHC, which, probably prior to 2020, when things were starting to really fall apart and didn't know what things were going to look at, people still looked at GE Healthcare as probably the crown jewel of that company, is that it was a recurring revenue business. There was a lot, they were very entrenched and that kind of stuff. Now, all the businesses were quite entrenched, but I think there was a little less worry about GEHC. Subsequently, that's actually underperformed. That's only up about 10% during that period of time, that May 2024 to now type of vibe. So all of them are up positively, but just the rebound in and of itself for a company, for a very, hey, you never go broke owning GE, 80s and 90s, it really felt like that, to where in the 2015-20 range, is this company going to be around, was a massive shift. And now the massive shift has really turned back. And it's an amazing rebound story. So if you haven't paid attention, now, would I be buying that stock here? That's a different story. And this is not a recommendation for that. It's an acknowledgement that GE has really recovered itself. And all 3 businesses are still very viable businesses. And in fact, can be market leaders, or at least close to market leaders in each of those segments. You can make that argument. So they're worth looking at as independent businesses, and making that determination on whether you want to own them or not is absolutely fine. From my side, it was just much more of an acknowledgement of the performance of the company in and of itself, and really rebounding off of what we thought was going to be maybe going away. Last one on a personal side. I was laughing the other day with the wife about our algorithms, and what the World Wide Web is telling us we should be watching. But one of the things that it has pointed me to lately is absolutely phenomenal, which is Subway takes. If you haven't seen this, I think it was initiated on TikTok. And to be honest with you, I don't use TikTok, but I've seen it on Reels and I've seen it on YouTube and other things. And I've seen the guy who does this be interviewed in a couple other things, Seth Meyers' show here recently. And it's actually just excellent. It's a very simple premise. If you don't know what it is, Subway takes, guys on a subway, interviews somebody else, whether it's a celebrity or just a random off the street, and just says, give me your take. And they give a take and they say agree or disagree, and they talk about it. and it's very short burst, but it's excellently done. He is very good at keeping the conversation going, taking a stance, whether it's pro or anti. He kind of takes a stance in either way, and they have a debate about it and they explain it. It's very fun. It's very cordial. It's interesting. Some of the takes that are taken, people go a little wild sometimes, which is absolutely fine in my opinion. I just like the format of it. I think he does a really good job, and it's a really fun watch. So if the algorithm on your side, you want it to work for you, Subway Takes, you'll find it, and then you'll be flooded with them just like I was. So that's all I have for this week. Tune in next week where this beard might be better or might be worse or might be gone. But outside of that, until then, take care. Have a happy holiday season, and we'll see you next week. Till then, bye.